Welcome back to Smart Stock Sam, where we cut through the noise and get straight to the data which matters the most. Before we dive in, I want to ask you something. What if I told you there's an AI stock right now, hiding in plain sight, that just crushed its own internal growth targets by more than 130%, and the market still hasn't priced it in? A company that's not just surviving the AI race, but quietly becoming the backbone of how global commerce actually functions. And yet, its stock price is sitting in a completely different universe from its fundamentals. Today, we're breaking down Rezolve AI, ticker RZLV. The earnings data is out, the numbers are jaw-dropping, and the real question on every smart investor's mind right now is, why is this stock still suppressed after a report like that? And more importantly, what happens next? We're going to cover the growth engine, the balance sheet reality, the short interest sabotage, the options market explosion, and give you the exact price levels to watch. So stay locked in, because this one gets very interesting. Let's start with the velocity, because these numbers need a moment to sink in. Rezolve closed out the year with an exit annual recurring revenue of $232.8 million. Now here's what makes that extraordinary. Their original internal target was $100 million. They didn't just beat that target, they absolutely obliterated it. But the number that should really make you sit up straight? In the second half of 2025, revenue grew by 543% compared to the first half of the same year. 543%. In 6 months. That is not a company experimenting with AI anymore. That is a company that has crossed over into what analysts call production-grade infrastructure, meaning real businesses are staking real money on Rezolve's technology to power real transactions at scale every single day. Now here's where it gets layered. Because while those growth numbers are incredible on the surface, there's a hidden metric buried inside the balance sheet that completely flips how you should be thinking about their profitability picture. And that's exactly where we're going next. Most people look at Rezolve's GAAP net loss of $101.4 million, and they panic. They see a 9-figure loss, and they're gone. That is the single most common rookie mistake in growth stage tech investing. Here's the truth. The actual cash burn, the real money walking out the door, was only $34.2 million. The rest of that headline loss, non-cash accounting adjustments, balance sheet items that don't touch the company's day-to-day survival one single bit. And it gets better. In December of 2025, Rezolve hit positive adjusted EBITDA. For a company growing at this speed, that is genuinely remarkable. Their core software margins? North of 90%. 90%. They are not just selling a product. They are operating a high-margin, scalable machine that gets more efficient as it grows. Now the critical question becomes, does the market actually believe this trajectory can hold? Because believing in the numbers is one thing. Getting the market to validate them is an entirely different fight. Management is guiding for $360 million in revenue for 2026. That's roughly 7.5 times year-over-year growth. And they're targeting an exit ARR of $500 million by the end of next year. Now look at what the analysts are saying. The current average price target sits at $11.25. From where this stock is trading right now, that represents a 371% upside. 371%. So here's the question you should be asking yourself right now. If the upside case is that massive, why isn't everyone piling in? What is the market seeing or not seeing that's keeping this stock pinned down? Part of the answer is in how they're funding all of this explosive growth. And this next part? This is where Rezolve makes a very bold promise. After an oversubscribed capital raise in January, Rezolve is now fully funded with $750 million in total capital. And management has made a direct pledge to investors: zero operational dilution. No returning to the equity markets to water down existing shareholders just to keep the lights on. For a retail investor, that is genuinely music to your ears. Your shares aren't getting diluted away while the company chases growth. They have the runway, right now, to execute that $500 million ARR roadmap without asking for another single dime from the market. But having capital is only part of the equation, because even with a fully loaded war chest, you still have to win the technology battle. And here's where Rezolve's actual competitive edge becomes clear, and why the threat from the most obvious competitor might be far less dangerous than you think. Everyone's talking about generative AI. ChatGPT this, GPT4 that. But in the world of commerce, in the world of real transactions, live inventory, supply chains, and warehouse-level precision, general-purpose models have a critical flaw. They hallucinate. They generate confident-sounding text that can be dangerously wrong. And in a billion-dollar supply chain, wrong isn't acceptable. Rezolve plays a completely different game. They are built on SKU-Level AI, deep, proprietary integration where the model knows every single item in a warehouse, every pricing variable, every transactional condition, in real time. This isn't an AI that writes you a product description. This is an AI that manages the infrastructure behind the transaction itself. That is their moat. And in an environment where commerce companies need AI that performs, not AI that sounds good, that distinction is the difference between a feature and a foundation. But even the best technology in the world can't fully escape gravity. And right now, Rezolve is flying into some serious headwinds. On the Catalyst side, the lineup is legitimately impressive. A collaboration with Microsoft on agentic commerce. A $230 million acquisition of Reward. These are not small moves. These are strategic bets that signal Rezolve is building for dominance, not just survival. But here's the friction. Brent crude is hovering around $105 a barrel. There is deep market skepticism around US-Iran war de-escalation rumors. Stagflation fears are casting a shadow across the entire tech sector. Rezolve is essentially a world-class engine, trying to drive at full speed through a hurricane. And that macroeconomic gravity is showing up directly in who is, and isn't, holding this stock. Rezolve currently has 138 institutional owners on the books. We're talking heavyweights, BlackRock, Vanguard, State Street. But look at the recent trend, and something very interesting is happening. Retail investor inflow is up over 50%. Meanwhile, large institutional holders pulled back by 33% in the last quarter. Why? Because institutions don't tolerate uncertainty. They're sitting on the sidelines, watching, waiting for macro conditions to stabilize before they rotate back in, even when the underlying fundamentals are as strong as they are here. So right now you have retail money betting on the company's future, while the smart money waits. And that tug of war is being played out in real time, directly on the price chart. Technically, this stock looks like a coiled spring. The RSI is sitting at 54, perfectly neutral, neither overbought nor oversold. The MACD is flashing a slight sell signal in the short term. But here's where it gets interesting. The 5-day, 50-day, and 200-day moving averages are all pointing buy. The stock is essentially trapped, pinned between near-term support below and a resistance ceiling at $2.61 overhead. It is looking, almost desperately, for a catalyst to break in either direction. And if you want to understand why it can't seem to find that catalyst on its own, you need to look at what's happening behind the scenes in the dark pools. Here is where the picture gets uncomfortable and incredibly important. There are nearly 40 million shares currently sold short on RZLV, approximately 15% of the entire float. That alone is significant. But the number that should make your jaw drop is this: 60.63% of recent volume is happening off exchange. In dark pools, in non-public venues where price discovery doesn't happen transparently. What that means practically is that a massive amount of selling pressure is being applied outside of normal market visibility, artificially suppressing the price relative to where the fundamentals would otherwise take it. The shorts are leaning on this stock hard. But, and this is the part you want to pay attention to, that exact setup is also what creates the conditions for a violent short squeeze the moment sentiment shifts. If the news turns positive, the cover rush could be explosive, and the options market is already positioning for exactly that. Look at this implied volatility reading, 247.81%. The options market is pricing in a plus or minus 20% move in the immediate near term. We have a call wall forming at the $3 strike with over 9,000 open contracts. A put floor building at $2.50 and $2 flat. The stock is being compressed into an increasingly narrow price corridor. And when compression breaks, it doesn't ease out. It explodes. The only question the market hasn't answered yet is which direction that explosion goes. Let's zoom out and synthesize the full picture, because this is where it all comes together. RZLV is a high beta play where the stock price has become almost entirely decoupled from the company's actual operating performance. On one side of the ring, you have ebullient fundamentals, hockey stick revenue growth, 90+% margins, a fully funded runway, and a genuine technological moat in SKU-Level AI. On the other side, you have heavy technical gravity, macro stagflation fears, 15% short interest, and 60% of volume happening in the shadows. The stock isn't moving on earnings right now. It's moving on derivative-driven volatility. It's a battle between the long-term business builder and the short-term trader, and right now, the traders are winning on price, even while the business keeps winning on fundamentals. So what does the actual price map look like going forward? Here are your key levels. The pivot point, your aggressive entry, is $2.52. Below that, primary support sits at $2.36, which is your conservative accumulation zone. If the stock loses that level, the next meaningful floor is the $2 flat mark. On the upside, immediate resistance is at $2.56. The major ceiling, the zone you need to see the stock clear with volume to confirm that the bulls have taken control, is the range between $2.63 and $2.85. Welcome to the $2.50 battleground, and here's your playbook. Trigger 1, the upside scenario. If RZLV holds above $2.63 on a closing basis, combined with any positive headline around the Iran de-escalation narrative or a new institutional filing, that combination could light the fuse on a short squeeze directly toward that $3 call wall. That's your near-term profit target on the long side. Trigger 2, the downside scenario. If the stock fails to hold $2.36 and closes below it with volume, the likely path is a retest of the $2 floor before any meaningful recovery attempt. This is a binary setup. Both outcomes are live, and only one of them pays you. Know your level before you're in the trade. Before I give you the final verdict, a quick but an important reminder. Everything discussed on Smart Stock Sam is strictly for educational and informational purposes only. Nothing in this video constitutes financial advice, a recommendation to buy or sell any security, or a solicitation of any kind. Always do your own due diligence and consult a qualified financial professional before making any investment decisions. Investing involves real risk, including the potential loss of your entire principal. Now the bottom line. Rezolve AI is a high-growth, high-risk, production-grade AI infrastructure asset. The revenue velocity is real. The margin structure is real. The $500 million ARR trajectory creates a structural valuation gap that, at the current $2.50 price, is simply too large to ignore on fundamentals alone. My actionable take? Monitor the $2.50 pivot closely. If you're a long-term believer in AI commerce infrastructure, conservative accumulation near $2.40 gives you a solid risk-defined entry. If you're a momentum trader, wait for a confirmed breakout above $2.63 with real volume before chasing. The squeeze toward $3 is possible, but you want confirmation, not hope. The upside case here is compelling, but in this macro environment, patience isn't just a virtue, it's a strategy. Now I want to hear from you. Do you think the short sellers have this one right? Or are they sitting on a powder keg they can no longer control? Drop your answer in the comments below. If this breakdown added value, smash that like button, share it with someone who needs to see it, and make sure you're subscribed to Smart Stock Sam, because we do this every time there is an opportunity for wealth generation. I'll see you in the next one. Stay disciplined.